Hey, happy Wednesday. Give me a second. Okay, guys, welcome to Scaled Down Livestream, where we dive into all aspects about scaling down, aging, and everything in between. I'm your host, Natalie Lewin of Lux Transitions, and each week we bring you expert insights, personal stories, and practical advice to help you navigate these important life transitions. Today we have with us Rick Honeyford of Centum Mortgages. Rick has extensive knowledge in empowering older adults that are exploring the many different financial products that can help them in this chapter of their lives. In today's episode, we'll uncover what reverse mortgages are, how they can help, and what are some mortgage products that can assist retirees in this stage of their life. So, whether you're interested in exploring your options or you're just seeking inspiration, you're in the right place. So, let's dive right in. Welcome, Rick. Thank you for joining us.
Thanks, Natalie. Pleasure to be here.
Pleasure is mine. So, how are you doing?
I'm doing great. I managed to stay dry yesterday, so that's good.
I was just going to ask that. It was some wild flooding that happened in the city.
Oh, unbelievable. But I mean, I'm sure there's some people that are still mopping up today if they're on low ground or whatever. But yeah.
Yes, it was. I don't know. Thankfully, it missed me. I'm in the city and I didn't lose power, but
Great.
people around me lost power.
Mm.
I had an appointment. I left one appointment, was going to the other. We're like, whoa, we can't. We've lost power. My little brother as well. He went to Union Station and couldn't go anywhere because it was flooded and the trains were canceled. And it was just absolute mayhem.
Yeah, my fiance had to walk, I think, about 5 subway stops because the power was out, so the trains weren't running. So
yes, so he actually called me in a panic. Can you pick me up? And I was like, okay, you got to walk though. You have to walk towards me because I don't want to drive directly into the mayhem.
Sure. Well, I think part of the Gardner was closed, DVP, just a mess.
A mess. Yeah. And I was actually surprised that we got it. So I remember when I heard Dubai got it, Florida got it, and I was like, this is wild. It's never going to happen here.
You never know.
You never know. It caught up to us.
Yeah.
So, well, thank you again for being here. Let's get right into it. First off, would love to hear more about Rick Honeyford and your mortgage journey and how did it start and how is it going?
Well, I guess the earliest beginning would be a little over 20 years ago. I started in the financial sector just as a life insurance agent. Okay. So I started as a captive agent, which meant I could only sell that company's products. And it was a good place to start because there was a lot of education and training and things like that. But after I'd been there for a few years, I realized, there was a whole bunch of solutions that I couldn't offer clients because all I had was what that company offered, much like the banks today, right? If you go to a bank, they're going to offer you what they have available. They're not going to talk about what other banks and other lenders offer you.
Right.
So after I've been doing that for a while, I decided I wanted to get into financial planning. As opposed to just being a product salesman, it was more about creating a plan so people could achieve their goals. Right? It's kind of like, how do you get somewhere if you don't have a roadmap on how you're going to get there? And while I was doing that, one of the most important products in anyone's portfolio is their mortgage, the debt. Right?
Right.
And if you get the wrong debt, it can be a lot more expensive in the long run, certainly. So I was talking to people about it all the time. I was like, why don't I just do it? So I went and got my mortgage license. And that's I've been doing mortgages for about 10 years now, I think.
So what's the saying? What is the saying? You can't
People don't plan to fail, they fail to plan. That one.
Right. Well, that wasn't what I was thinking about. I was somebody can't do it, you just do it yourself.
Sure. Okay.
Okay. So how's it been going over the last decade?
Well, it's an interesting time. I work with a lot of realtors. So it's definitely been interesting over COVID, and then the markets the real estate market right now. It's just been crazy because either there's nothing on the market, or everyone's waiting for rates to come down. So yeah, it's always interesting. You never know what's around the next corner.
Right.
So, but yeah, it's well, I mean, one of the questions I get asked most frequently, of course, is what's going to happen to interest rates, right? And it's like, well, if I could predict what was going to happen to interest rates, I'd be psychic. So I'd just buy a lottery ticket, and then I would not have to work anyways.
Right.
But I can tell people what the experts are prognosticating. Which is that there will probably be a rate cut shortly, but again, it's probably only going to be about 25 basis points, so it's not going to be a huge difference for most people. Of course, if you wait to buy until after the rate cut, then it's a good chance prices will start trending upwards again. So it's one of those things where, and I mean, it might not be. I think it's next week or something like that the Bank of Canada is meeting. It may not be next week that they do the cut because, of course, we have to look at what the Fed in the States is doing, right? We don't exist in a bubble. So we have to pay attention to that. Sorry. They want to be stars. Anyways, yeah, it's... sorry, I lost my train of thought there.
Oh, that's okay. No problem.
But
I'll direct you.
Okay, sounds good.
I'll direct you. And yes, the Bank of Canada announces the 24th, which is next week.
Yeah.
And I think, fingers crossed, I think, it looks like they might cut, but who knows? Like you said, I don't have a crystal ball, or else I would buy a lottery ticket as well. I'd still work though, but I would buy a lottery ticket. So wanted to talk to you. Sorry, go ahead.
I just remembered the other thing I was going to say is the Bank of Canada, of course, is important to what rates are. But what's actually far more important is what depending on what rate you're looking at. But if you're looking at a 5-year rate, if you want to take a look at the 5-year bond yield, that'll give you a good indication if lenders are going to raise or lower rates. Because of course, they have to. If you're an investor and you're looking for somewhere safe to put your money, you can choose mortgages, but you could also choose government bonds, T-bills, things like that, which is also considered very safe, right? So obviously you're going to put your money wherever you're going to get the best yield. And so mortgages have to stay pretty close to what bond yields are, because otherwise everyone's just going to, if the rates get lower than bond yields, everyone's just going to put their money into bonds instead of mortgages.
Okay. So. Well, thanks for that. Sometimes when I hear hear the correlation between bonds and mortgages. I don't always understand. So thank you so much.
My pleasure.
Let's talk about reverse mortgages. So there's a lot of chat that, they're good, they're bad. What is the actual story about reverse mortgages? How do they benefit older adults that might no longer be in the working force, but they want to stay in their home, but need some financial flexibility? How can you share and inform us on that?
I think they can be a very good solution for people that have a bit of a cash flow issue. Now, I should also clarify that they are available to those 55 plus. So you don't necessarily have to be retired in order to access a reverse mortgage. Now, it might not always be the best solution. If you are still working, you may be better off getting a line of credit, for example. But the problem with people as they get older and they're not working is they tend to have much more limited incomes, which means the only way they can access the equity in their house, short of selling it, is to use a reverse mortgage, because it's much easier to qualify for a reverse mortgage than it would be for a line of credit, which is essentially the same as qualifying for a regular mortgage. Now, reverse mortgages are very, very similar really to a regular mortgage. It's just that you have the option not to make interest payments. So if you choose not to make interest payments, then of course the interest is going to accrue and you're going to pay interest on the interest. But if you look at, say the past 10 or 15 years, the interest rate on reverse mortgages has been lower than the market appreciation. So you can take this equity out of your house and your house is still worth more. Like the equity you've got in your house is still more than it was when you did the reverse mortgage, because the market has kept going up. Now, of course, there's no guarantee that the market will continue to perform the exact same as it has in the past. And of course, who knows what's going to happen to interest rates? A lot of people complain about interest rates right now, which, I mean, it makes sense, because if you were paying 2% and now you're looking at a 6% renewal, obviously that's a big increase. But historically 5-6% for a mortgage rate is not, too far out of the norm.
So I was thinking about this. So when I got my license, interest rates were over 9%.
Wow.
And I remember deals in that market.
Mm-hmm.
And now, even 4.59 I saw, I think, a little while ago. Mm-hmm. And the person I was speaking about they were complaining about it.
Wow.
And, they had actually been in the market when the interest rates are higher. I had to remind them that, mm-hmm. Hey, remember when you bought the house where the interest rates were?
Yeah.
So it's like, when it's good, enjoy it. And when it goes back to normal, we have to figure out what that normalcy looks like and get back into line.
And interest rates, of course, are a double-edged sword. If you're trying to save and you don't want to take a lot of risk with your money, obviously it's very difficult when interest rates are below inflation, right? You're actually losing buying power if your money is sitting in the bank getting, say, 2% interest and inflation's at 3%, right?
Right.
So, I mean, I think, unfortunately, house prices have gotten very high, probably because interest rates were kept so low for so long. So that's why it becomes an affordability issue. But you have to look at, one of the first things I usually introduce my financial planning clients to, especially if we're talking about investments, is the real rate of return. And you have to factor in things like inflation, taxes that you have to pay on your investments, things like that, to, at the very least, you want to maintain your buying power. And I think a lot of people forget about that. Like if inflation's like 4 or 5%, interest rates have to be higher. Otherwise, the lender's losing money by lending it to you.
Right. Okay. Perfect. So what are the eligibility criteria for a reverse mortgage, and how does that process work?
Okay, so the most important thing is your age. And so it can be very problematic if, for example, you've added your children to title or something like that. But they will look at the age usually of the younger spouse. And they'll calculate what percentage of your mortgage you're eligible to get a reverse mortgage for based on your age. Uh, as far as income potential, you just have to be able to make, if it's a condo, you have to be able to continue to make the maintenance fees. You have to maintain fire insurance on the property, just like any other mortgage, and just have sufficient income for the general upkeep of the property. So it's not like a traditional mortgage where it's like, okay, you have to meet this GDS and TDS ratio and that sort of thing. Basically,
Okay.
they just have to be comfortable that you'll have sufficient funds to maintain the property.
Okay. And what's an idea? So what's an idea of an interest rate for a reverse mortgage?
Well, this can vary quite widely. So if you're doing an open reverse mortgage, I'm actually working on one of those for a client right now. It's very similar to doing like a line of credit, because you can pay it off at any time with no penalty. But the interest rate is, I think, around 11% right now, which is comparable probably to a private mortgage.
Okay.
But generally speaking, a reverse mortgage is going to be about 1% higher. The interest rate will usually be about 1% higher than a lender. So, for example, if you were to look at, say, RBC's rates, they would probably be, it depends, because of course they have rate specials and things like that from time to time. It depends on the term you're looking at, because you can lock in for a 1, a 3, a 5-year term, just like any other mortgage lender. So yeah, it's usually a bit more expensive than an A lender. However, A lenders have a lot of different rates too, right? Like, for example, you were talking about 459. That 459 rate is only available to someone that's got an insured mortgage, meaning they did a less than 20% down on the purchase and paid premium for the CMHC. If you got a house worth 1.3 million, for example, you can't get an insured mortgage because your property is uninsurable because it's over $1 million.
Right.
So you're probably paying maybe 5.6% or something like that. You can't get that 459 rate, right?
Okay.
So there's a range, even with the A lenders. There's alternative lenders like credit unions and so forth. I would say that reverse mortgages tend to be more along the lines of what you'd be looking at if you were to go to like an uninsured credit union type rate.
Got it. So I'm here taking notes. I'm learning a lot. Thank you very much. Okay, so what financial planning services do you offer that are specifically tailored to retirees or seniors?
Well, I mean, obviously, these would be good for anyone, but it's more pertinent to seniors. Would be, of course, planning their estates. And reverse mortgages can tie in nicely with that. Instead of waiting until you die to give an inheritance to your kids, you can access some of the equity in your home and give them an inheritance while you're still alive. So you can give them, they don't have to keep renting while you're, sitting in your house. You can get them into the property market by gifting them that down payment now. I don't know if you saw the article about, it was from RBC. They did a study on first-time homebuyers,
Okay.
and I don't remember the statistic, but it was the vast majority of people that are first-time homebuyers now are going to the bank of mom and dad, because that's the only way anyone's coming up with the down payment. So if you've got 300,000 sitting in savings, great. But most people, if they do have that sort of money, it's usually locked up in an RSP or a pension fund or something like that, or in your home. So as opposed to waiting to give your kids their inheritance, it can be a way you can do it as a early inheritance, and that's all part and parcel of an estate plan. Now, another thing to look at with estate planning is obviously most people's houses are going to make up a large proportion of their estate. Now, if your estate has to go through probate, you could end up, the beneficiaries could end up waiting years before they actually get their inheritance. So we can look at things like using life insurance products, assuming people still have sufficient health, or segregated funds are an investment product that we can often use to help people avoid probate and get the assets directly to the beneficiary. And especially if the estate gets tied up in probate court for some reason, that can be a huge advantage. And also, of course, you avoid paying the probate fees, which, it's essentially just another tax.
Right. Yeah. I've been having this conversation with clients for a number of years, but definitely you're seeing this happen more. The bank of mom and dad has gotten more popular. Yesterday, the client I was with, he will be selling, and one of the reasons are, I don't need this house. It's too big for me, and my kids are renting. So I can pay off a new house, buy a new house cash, still have money in the bank, and give my two children money to buy their own home in this market. The bank of mom and dad is very popular, and it's driving them as well to make certain decisions to be able to help their children out now, and also be able to enjoy seeing what the kids will do with what they would have left them.
Exactly. And if you have two properties going on, so one of the big advantages of a principal residence, other than the fact that you're not paying someone else's mortgage because you're living in their house, is it enjoys, there's no capital gains on the principal residence. So it's an amazing investment for that reason alone, right? I mean, I don't really think there's anything comparable, because even RSPs and things like that, you're just pushing the taxes down the road. But your principal residence, there's no tax. You'd have to be paying someone else probably very similar amounts of money to what you'd be making in a mortgage payment anyways.
Okay.
So, it's really giving your kids a good head start, on their financial future. Because I mean, if you want to have grandkids, and then they want to, I can't remember what the statistic is, but it's like 30 years to save up for a down payment now. So it's, if you want to have grandkids and you want your kids to be able to pay for your grandkids, or at least some of the costs for the post-secondary institution, how are they ever going to save for that if, they're renting from someone else and all that money is just gone?
Right. So you've shared the pros with reverse mortgages. What could the cons look like?
Well, I believe it was Einstein said that compound interest is the eighth wonder of the world. And of course, if you choose not to make interest payments, so this is something that a lot of people aren't aware of, is you can choose to pay the interest on a reverse mortgage so that the debt does not grow. However, if you choose not to make those payments, then compound interest, especially if interest rates are higher, you could, a lot of that equity in the property you could lose. But, obviously you have to worry about, taking care of yourself. Like, what's the point in, having a retirement where you can't do anything because you're cash poor, right? You might not want to sell your house because you like your neighborhood, but you can access that, and you don't have to take all the money at once, right? Like maybe you're able to take, say, 500,000 out of your house.
Right.
You probably don't need 500,000. So you could just, you could do it on a draw basis. So just like any financial product, it's not necessarily the right solution to anyone, for everyone, I should say. Yeah, I really don't see it as being any more dangerous than a regular mortgage. It's just that, obviously it depends. Like, I mean, if the real estate market were to collapse, which I don't think is very likely. I mean, there could be a correction just like any other investment. But yeah, you could end up having, not a lot of money left to pass on to the kids. but there's things you can do to hedge against that. For example, you could take money out of the reverse mortgage and purchase a paid up life insurance policy.
Okay.
So that you're covering the costs, like the amount that you're taking out in the reverse mortgage. So of course, this depends on how old you are at the time you do it and so forth. But yeah, you have to look at every product and decision you make carefully. It can be a major financial decision.
Okay, beautiful. So let's say somebody's thinking about making a move, but they don't have a lot of cash on hand. And we know that they will need their deposit when they purchase a new home,
Sure.
and they will need other moving expenses. So let's say in Toronto, they need their closing cost, and they don't have access to the funds until their house closes. What products do you have that can help them in this situation, if any?
Well, I mean, it depends on their credit. So usually a lender is going to want to see 1.5% for closing costs, just to get the mortgage approved in the first place. So if you don't have that, then it can be very difficult. Now you could do an open reverse mortgage, for example, and the beauty, assuming you're 55 plus, and the beauty of that product is that you can it doesn't affect your TDS when you're buying another house.
Okay.
So I should explain TDS. That's total debt service. So if you're using an A lender like a bank, for example, you're usually capped at 44% of your annual qualified income to qualify for the TDS ratio. So if you were just to do a traditional mortgage or access it on a line of credit, for example, that would have to be factored into the total debt service ratio. And sometimes that makes you ineligible for that mortgage. So as well as, if you just use your credit cards or a non-secured line of credit, you have to be very careful about your total debt service ratio. This is one of the key things to tell a client when they're buying a house. Don't go out and put anything on credit. Don't go out and buy a whole bunch of new furniture for the house, because the bank can pull your credit report the day that you're going to get the keys for the house, and they can kill that mortgage if your TDS ratios have gone out of whack. So a reverse mortgage, assuming you have a property in the first place, can be an excellent way to access that equity, to come up with down payment, to come up with closing costs and things like that. There are also mortgages where, if TDS isn't a big issue for you, say you're high income or something and you just don't have the cash, you can actually borrow the down payment as long as it fits in the TDS. So of course you have to have good credit if it's an unsecured down payment and so forth. But there are lenders with that flexibility as well.
Okay. And so do gift letters work in this instance as well? What could that look like?
So, okay. So if the funds are being gifted to you from a parent or an immediate relative, so like brother, sister, I suppose your child as well, but banks usually insist that it's an immediate family member for the gift letter. But other than that, yeah, it doesn't matter if you're borrowing the money or, if you got the money from the sale of property or you cashed in investments. They just want to make sure, you have to provide a paper trail so they can make sure, fulfill their anti-money laundering obligations.
Okay.
And then a gift letter to indicate that you do not expect repayment.
Okay.
So.
Perfect. Well, this has been very helpful. We're near the end, but we have some rapid fire questions, and we've mixed them up today. So I'm just going to start off. So if you could have dinner with any fictional character, who would it be and why?
Fictional character, that's a new one. Let me come back to that one, because fictional characters, I don't know, I'll say Tom Sawyer, because he's the guy that's coming to my mind right now.
Okay. And why Tom Sawyer?
Oh, I should have known there was going to be a follow-up, because he was the one that came to my mind.
Okay. Okay, fair enough. So let me ask you, what is your go-to karaoke song?
Oh God. I want to know what love is, I guess. I don't really sing karaoke, but I'll sing in the car to.
Oh, okay. Well, your shower
girlfriend.
song.
Yeah, basically. Exactly.
You want to sing us a line?
Oh God, no, I'm not going to subject people to that.
No problem. You know, last week's guy, he sang right on key, but we want the live to keep going, right?
Yes, I think I missed my calling. I definitely should have been a singer, but I unfortunately don't have the capabilities of singing very well. So what are you going to do?
No problem. So let me ask you, if reverse mortgages were a superhero, what would their special power be?
Freeing up equity in your home.
Is that with a cape?
Sure.
No problem. What's the most unexpected benefit someone has gained from a reverse mortgage based on your experience?
Unexpected. I mean, I guess, it could be, giving your children financial freedom and getting a closer relationship with your kids. I don't know if it's necessarily unexpected, but yeah, I mean, it can definitely make life a lot better for everyone. Just, having the freedom to do what it is you want to do. I mean, that's the whole point of finances, right? Is to gain financial freedom.
Right. Okay. So if you could instantly master one skill, what would it be?
Oh, definitely singing.
You know, there's a stat. This is actually the number one skill that people wish that they could that they would have. Singing.
There you go.
What's the most adventurous thing you've ever done? Let's keep it PG though.
Yeah, when I was in the Army Reserves, oh God, probably around 30 years ago, the Americans came up and they had the, those helicopters from the Vietnam War, the Hueys. They were flying those, and they took us for a ride where they're like skimming the tree line with the door open. So that was pretty cool.
Pretty cool. Heart beating, but cool. No problem. Yeah. Well, thank you so much, Rick. It was a pleasure speaking with you. And thank you for joining us. As you all know, I'm Natalie Lewin of Lux Transitions, Keller Williams portfolio in Toronto. I specialize in helping older adults 65 plus scale down to their next chapter. I'm passionate about assisting my people and educating them on this journey. So if you or someone you know is considering a transition, please DM me to schedule a discovery call. Remember, life is beautiful, and I'm here to help make the most of it. Thank you so much, and look forward to seeing you next week. Ciao.
Thanks, Natalie.